Welcome back, guys. So for this video, we're going to go over the last confirmation, which is the stochastic. Again, guys, you have to use the specific stochastic because it gives you extra confirmation that other stochastic doesn't give it. All right. For this stochastic, let's talk about the indicator real quick. So this indicator, it has two levels, okay? It has the 80 zone and the 20 zone. As you can see, the 20 zone is a confirmation for a buy. Whenever the market is close, either below or close to the 20 zone, it symbolizes a buy. Pretty simple. It's like a support level. This is your support level. The 20 zone is your support level. And the 80 zone is your resistance level. Common sense, guys. Pretty easy. Okay? That's all we need to know. And also, we have the dots in the stochastic, right? We have small dots. And those dots symbolize the crossing of those of the lines, right? And that will help us. It will give you a advanced information or advanced like it's like a leak of information. It tells you right away that the market just crossed and the lines just crossed, okay? It could cross multiple times. That's due to the same currency's strength. If they have the same strength, this will happen. If you are in a arm wrestling and both of y'all have the same strength, you guys gonna stay on the middle. Nobody gonna push right, nobody wanna push left because the strength is the same. Until one of you start losing strength, right? As soon as one of you lose strength, that's when the other one will start gaining pace on you, right? It's the same thing. So if we have one pair with more strain than the other, it will push the market up, and so and the inverse will happen if we have different outcome. Okay, for this, so the dots symbolize the crossing. We got the two zones, and lastly, we have the background. Okay, the background is when the background is green, we are buying. When the background is red, we are selling, okay? Example, in this area, we start selling. Background, red. In this area, we start buying. Background, green. In this area, start selling. Background, red. In this area, start buying. Background, green. Now, look what happened, guys. What a coincidence. Is it a coincidence? No, it's not. It's the strategy itself working together, okay? So remember, at this point, oh, I think I removed it. Let's get it back. So stochastic, click in here. Oops. So at this point, we have the green background, okay? So that's basically the strategy working with itself. We have all the confirmation in the chart, all the confirmation in the currency indicator. So let's check the confirmation for this specific currency. The specific indicator. So this is our checklist. First from the checklist. Are we on that 20 zone? Because remember, when we trying to buy, we need to look for the market close or below the 20 zone. Okay? In this case, we are below the 20 zone. This is good. If it's below, it's even better. But sometimes it gets close, okay? And it's okay to be close. So in this case, we are below. So that's our first confirmation. Boom. That's simple. Why it has to be close to the 20 zone? Because 20 zone is your support, and that's we buy on support levels. And there's no breakout here. There's no breakout will continue to go. No, there's no breakout. If we have something like a small buy, it will go all the way up, but it will go fast, okay? It will go in a faster pace. But we'll see that on the other examples. For this specific occasion, we already have the cross, on the 20 zone. That's the first confirmation. Second confirmation, we want to see the lines curving out. Okay? We want to see it curving out. We want to see it curving out. Exactly just like it's doing right now. Either curving or crossing. Whatever comes first. Because sometimes they're really separated. Okay? Sometimes they're really separated. So just like this one, see how they are separated, but it moves, it points up, symbolize that cross. Same thing here, points up, symbolize the cross. That's exactly what we're looking for, okay? So in this case, the blue line already crossed the red. And again, guys, when we bind, the blue will always be on top of the red. Whenever we bind, the blue will always be on top of the red. If you ever forget that, just go on the chart and see whenever the market is going up, go back to the stochastic, see what line is above. In this case, the blue line is above the red because the market's pushing up. Blue line crosses above the red. That symbolizes a buy. So we want to catch that early stage so we can get that good entry. So in this case, we got a crossing. We are on the 20 zone. That's the first confirmation. Second confirmation, blue line crossing red in a buy situation. Again, in a buy situation, the blue line has to be above the red, okay? So that's the second confirmation. Blue line crossing above the red. Boom. The third is the background. Is the background green because we are looking to buy? Yes, it's green. Common sense. And like that, we have all the confirmation. Okay? And that's it. Now, let's say we place a buy right there. Where do we put your stop losses? You can put your stop loss either below the Bollinger Band or 5 pips. It could be 5 pips if you have a good entry. If not, just remove it outside Bollinger Band. Just leave it outside Bollinger Band right there. Okay? So now that we have our stop loss, where would you put your take profit? Close to the red right there. Okay? It usually gives you 10 to 20 pips on the 15 minutes. Okay? In this case, 20 pips. Let's put it a little bit lower just to be more comfortable. Okay? So now that we have all confirmation, chart, currency indicator, and stochastic, let's talk about this red line you see in here. That's the 20 EMA. Whenever you're using the 20 EMA, okay, it'll be used as a support or a resistance level. If we are below, the 20 EMA is our resistance level. So what happened? Let's go really quick over the basic. So this is your support. This is our resistance, support. So support, resistance. Support, resistance. So if the market is doing this movement, right? What if we break the resistance? So what usually happens? We have a breakout, right? Usually it plays around close to, before it breaks, it plays around and then it breaks, right? We have a break, usually we have a retest, and we have a continuation till our next zone, right? That's the common retail trader. I say retail because that's how the smart, the Wall Street call everybody use support resistance. I used to use support and resistance when I was build my my account, but now I trade differently. I use different concept instead of support and resistance. But both way, support and resistance does work. It's pretty accurate. So I still use it, to be honest. But okay, let's get back to the example. So when we break resistance, usually we have a retest and we continue to go. We wait for that breakout. When we have a breakout, it gives us a confirmation that the market will continue to trend in that direction. If it's not a fake breakout, of course. All right. So that's the next thing that we're looking for, the 20 EMA. So if it breaks the 20 EMA, that's a confirmation to continue to buy or sell. Okay. Let me show you guys an example real quick. In this case, it broke 20 EMA and it went all the way up and then came down and played around the 20 EMA and then bounced back. Okay. Another example. Bounce from the 20 EMA, broke 20 EMA right there. Retest, drop. Okay. Same thing here. Play around the 20 EMA, retest, drop. Same thing here. Resist on the 20 EMA, broke it all the way up. Same thing here. Broke, close, and then retest, came back up, break it all the way down. 20 EMA, broke it, retest all the way down. broke it all the way up, broke here, this candle all the way down. So you get the point. Whenever we have a break of the 20 MA, that's the extra confirmation in all time frames. Okay, all time frames. So let's see how it works. Now we have all the confirmation plus place our buy. Let's see how it rolls. See that? You have that pullback, totally normal. Boom, right there, broke 20 MA. If it breaks 20 MA, we have a confirmation to keep buying when it breaks the 20 MA. So in this case, we're going to hold our trade, right? Right there, retest, a retest. You see that? Market came down, retested. Let's see if we can keep going. If you want to be more careful, now you can move your stop loss into break even or below the 20 MA. Could be right there, just to secure some profit. And boom, came back to our break even. Totally all right. It came back to retest the 20 MA. You see how it closed? It closed close to the 20 MA, and then the market pushes up. That's totally fine. Now that we are right here, should we exit our trade? Not yet. When you're in this position, you want to move to a higher time frame to see if there's opportunity to hold your trader for a long period of time. Look if you cross the 20 MA. Yes, you did cross the 20 MA in a higher time frame. So that's give you kind of like an extra confirmation to keep holding. But we also have a small resistance level here. So we have to take that in consideration. You could hold it or move your stop loss into 20 MA. So now that we're done with the 15 minutes, because it's already close to the top of the Bollinger Band, we can go to the higher time frame to follow our trade to see how close is it to the top of the Bollinger Band. So that's opportunity to transform a scalping to a long-term trade, okay? So in this occasion, let's see what happens. Right there, boom. We outside Bollinger Band from the top, okay? From the top. We broke resistance right here. So we have extra confirmation to keep buying. So we hold this trade until the market comes back inside and use the same concept we use right here. You see how it keep crossing, stochastic pushing up? That's exactly what we're looking for. So let's see how the trade goes. Boom, right there. Keep closing outside. So we keep holding. It closed back inside. Time to exit the trade. You can exit your trade right there. How many pips do we got from this entry? About 48 pips. On a standard lot size, that's $400. In what? 2 hours. 2 hours, you made $400. Simple. It's that simple. It's that easy, guys. Let's see how it keeps going. We already exited the trade, by the way. But if you want to be more aggressive, you can move your stop loss into 20 MA just to hold your trade. But you're going to get used to it. You're going to understand how the strategy works. And you have that intuition to gives you guys more confirmation. Plus, don't forget to use this your technical analysis. Remember, it broke resistance level there. So you got to use the technical analysis also, okay? Boom, come back to retest the support, the resistance that broke. Is the market moving up? Boom, right there. Went back up. Common sense, guys. See that? Boom. If you would have used technical analysis with this strategy, you'd have known that this is a resistance level, got broke up. Like we said, retest, and the market moves up. We got to know those things. Okay? And look at that. Now we not only 50 pips or 40 pips. We're already in 80 pips profit. So let's see how it goes. Again, forms a new level. Keep in mind, that's the new level right there. And also, it's a level extended. You can extend it here. It's a level right there. Came back to retest it. Same thing. Are we holding? Yeah, we're going to hold it. There you go. We are already 100 pips. More than 100 pips, I believe. 107 pips right there. Perfect entry. We could have got our entry before this move on the doji candle on the 15 minutes. We could have entered there and made over 150 pips, I think. Around 118 pips. That's $1,000 on a standard lot size. Okay, guys? With no drawdown. So if you would have entered on a 15 time frame, all right there, you had no drawdowns, meaning that if you had $150 account, you could flip it to $1,000 just having this one strategy. Okay, that's the advantage of having the easy strategy. All right, for the next video, guys, I will go over the on a sell occasion, which is the same thing but opposite, right? Okay, guys, I'll see you guys on the next video. But before I leave again, I want to show you guys how we bounce off the 20 MA. See, never close outside the 20 MA. We came back to retest our resistance level, was a new support level in this case, and then we pushed up. And we bounced on the 20 MA. It didn't close outside the 20 MA, so that's why we bounced. See, we bounced again. We bounced again on the Bollinger Band. So you see what I'm going with that? Bollinger Band, bottom Bollinger Band, continue to buy. So we entered here, market top, came to retest the resistance level, took off, came back to retest the resistance level, which is our new support, took off. So you can put your technical analysis in action to help you confirm all your trades, okay? And that's it, guys. That's the easy strategy. It's that simple. And like I said, you can use it on all time frame, okay? So let's see on the next video. Actually, yeah, on the next video, we're gonna talk about the sell occasion. I'll see you guys then.